Amisha Vora as well with us on the show. We've also got Naresh, Mirani. Good afternoon to you, Amisha. Happy Women's Day. Thanks so much for joining in. Let's start off by talking a little bit about what you're making of the overall auto theme. While a lot of companies are going all out in order to push their EV foray, we have seen, the auto sales numbers as well that trickled in quite encouraging. What's your sense as to where one should really be looking at opportunity within autos?
So first and foremost, very happy Women's Day to you and all the women viewers also. Particularly coming to auto, I think it's a very interesting sector on which you asked me question, because I think the heat of all the commodity super cycle that we are expecting and which is unfolding to start with, say even crude or all the metals is going to be felt by auto sector. And particularly both ways, when petrol diesel prices go up, your ability to spend on a monthly basis reduces or your cost goes up, so to say. That is, consumer is getting impacted. But when the metal prices go up, the gross margin of the manufacturer comes down. So when we are seeing this particular scenario, and also the fact that all the pent-up demand was being seen in last 4-5 months, I would rather suggest that I would go with more economy-driven rather than passenger-driven companies immediately. So I would rather focus on Ashok Leyland to start with, where the commercial vehicle cycle would be in for a next, will be much better over next longer period, 2 to 4 years plus, than what it is for last few years. And second, if I have to bet, I would rather bet on Mahindra and Mahindra, because I feel
we seem to have snapped that connection with Amisha. We'll just get back to her in just a bit.
Amisha, I'm hoping that you can hear us clearly now. Just wanted to ask a few questions as well and understand a little bit about the Women's Day portfolio. What exactly have you curated and what does it comprise of?
So, we are launching this Wealth for Women portfolio. It's a multi-asset portfolio wherein the investments will be decided across asset class, comprising of equity, fixed income, gold, and within equities, we are taking exposure in large cap and mid cap through the index ETFs and also investing in NASDAQ to capture the cutting edge companies and their growth into women's portfolio. And all this is invested across asset class through our quantamental proprietary meters, which allocate assets based on some of the readings that our meters are showing. This portfolio, particularly we say it is for women because it takes them away from all the detailing of, the company, its business, its PE, EBITDA, and ROE, and, the valuations are fair or not. So we are taking rather a different approach, wherein the investments are guided by some of the different proprietary factors, but invested only through index ETFs. So thereby reducing a lot of risk. And when you see the returns of this portfolio over 3-year, 5-year, 7-year, 10-year CAGR, it has been beating all the individual asset classes completely and outperforming because of the tactical allocations across asset class. So this is the first offering largely for women. It is a multi-asset portfolio, and above all, it is managed through quant methodologies. So human interventions and human emotions will not be disturbing the decision making.
Okay, that's very interesting, looking at a woman-oriented product that you guys are offering. Can you give us a sense as well, Amisha, as to what the your advice would be maybe to some women who are a little bit apprehensive to enter the equity markets, perhaps saying that, this is a terrain that's more suited for men. I know that there are quite a few women who dabble, but in comparison, you can't really, the scale is definitely skewed in favor of the male population. So, any sort of advice for those who haven't, when they're looking at the markets right now, what exactly would you like to tell them to encourage them to start investing in equities?
See, actually, as you and me know, and most of the women understand, that we are always better judge on a risk return and more discipline on decision making, frankly, than men. Sorry to say that, and I'm happy to also say that we are better decision maker on spending also. Having said that, we have to trust that particular sense that we as women have got. And since we are now earners also, large part of women are earning in many different industries and many different ways, and owning large to big and small to medium organizations of their own. It's very important they realize the importance of converting their savings into wealth. If their savings do not beat inflation, or they do not take part into India or world's growth story through equity, I think they are getting not fully participating and using the potential of savings. So I would very strongly say that they have to have a portfolio of their own. Maybe mutual fund is one way. Second is, of course, advisor. I would not think that working women have time to trade unless they are full-time into it. So we have curated particularly to suit these women who are working into different industries to get the advantage of wealth creation, this Wealth for Women portfolio. So I would strongly, strongly urge that by not starting this journey, you are denying yourself the power the money has to earn for you, rather than you only spending your time and earning for yourself.
But Amisha, where it actually starts with is the fear of not knowing anything about markets, not knowing about how to begin investing, and not having as much financial awareness or literacy about how to manage your money. For those women who are looking to make a start now, what is your piece of advice, and especially those who are looking at equity markets as an investment? Because not everyone has the time or the understanding to monitor it on a daily basis. Where should they make a start?
So now, for even channelizing your small savings, always mutual fund was an option for women to start. Basically, whether fixed income mutual fund or equity mutual fund. Both of them will give them returns better than fixed deposit, which they keep. So some part into fixed deposit is important, but not all. So the basics still remain, A, that you invest into mutual funds. But as we know, it has become so large, mutual funds have become so large that they're not tailor-made to a great extent. So approaching one financial advisor is important. But also very important is the fact that many things we don't know and we have learned. Like I wouldn't know many things in fashion, but I also Google, I also YouTube, so also you. So like if they don't know about financial markets, they also have to spend a little time to learn about it, because ultimately you're going to make money. And to make money, you have to invest little time. So I would say that the first is the decision that no, you want your savings to start generating more power for you and wealth for you. Once you make that decision, the journey will unfold into you taking a few steps of increasing your own knowledge, taking help, at the same time taking decisions, sometimes failing, but in the medium to long term, winning.
Before we let you go, give us a sense as to where you're seeing opportunity within the mid-caps. There's so much buzzing around of late, so many stocks that have reaped good returns, the good quality mid-cap names that is. Where is it? Any specific names or clusters of stocks that you like or sectors?
So there are 4 to 5 areas within mid-cap that I like. Of course, to start with, any businesses or any companies which are digitally challenging the existing business or disrupting the business, I think even if slightly overvalued, are going to have very good growth, and I'll continue to like them. One amongst them is Tanla. I also like mid-cap pharma, particularly domestic focused also, because their risk of any US related issues are very less, and domestic pharma is doing well. So one amongst them which I like is Eris Life Science. As a theme, I very strongly believe that residential real estate, the turnaround has started and it's here to stay for next 3 to 5 or more years. So all the suppliers, be it tiles, switch gears, switches, cables, pipes, so on and so forth, which go for residential real estate, should continue to do very well and see very good demand. So they, within the mid-cap space, will continue to do, I think, very well. And the fourth category, which I like, is also about the PLI segment, where the production is going to, or manufacturing is going to grow more in India. And last but not the least is the chemical segment, where we like NoSil we like Philips Carbon Black. Above all, we like stocks like GNFC. So all these 4 or 5 segments, and a few stocks I said, but maybe there are many more stocks which are likely to do well. I think midcap will continue to give very good opportunity to make money.
Tanla, NoSil, Philips Carbon Black, those are just some of the names that Amisha flagged off. Thank you, Amisha, for joining in, and look forward to chatting with you more often.